Okay, hello everyone. Welcome to this live intraday strategy webinar. Today is Tuesday, May 24th. Mike Boutros here with you. You know, your comments in the morning, guys, really get a guy going, ready to face the market day. So good morning to everyone. Rick, Kelly, Joe, Hussein, Eileen, Alan, Mark, Mario, Pujo. Great to see all you guys here in the room. Lots to cover. We got the release, obviously, of the BOE testimony before Parliament earlier this morning. Some interesting comments coming out of that. We'll go over those. All the sterling crosses are moving. So we've had our focus on sterling dollar. Obviously, we're in a swing trade there. Sterling CAD was on the menu yesterday. Interesting setup on sterling Oz, which we're still continuing to follow. Interesting setup on sterling Key as well, with the sterling strength and the Kiwi weakness. An interesting pair that we'll be looking at as well. Looking at the broader performance so far for the greenback, here's what the Dow Jones FXCM dollar index looks like. Just wanted to highlight a couple things. Obviously, British pound top performer today, 0.77% to the upside. Aussie dollar, worst performer, 0.9% to the downside. So obviously that sterling Oz trade with a little bit of an interesting move there. So we'll check that out. We're back above the yearly open, which does make a difference and certainly does shift the focus back to the upside. So we'll take a look at that as well. Looking at the dollar index, we're still following this trend line. And I showed you this yesterday, but it still continues to be the exact slope that the highs that we've made over the last 3 days have followed. So remember, the extreme is 11,989. That's the near-term bearish invalidation level. If we do get above that, you're likely to see a rally up towards the 100-day moving average, which is also coinciding dead on that median line. That being said, we are looking for some exhaustion highs near-term. No change from the outlook that we talked about yesterday. 30-minute on the dollar index looks like this. Whoops. There it is. Remember, we were tacking this on yesterday. We were saying, you know what, it's too early to tell, but we'll use it as guidance for the upside. So now that we've made these breaks, I'm going to go ahead and get rid of that. Continue to follow the broader median line formation we were following on that daily chart. Again, 11,989, that longer dated 50% retracement still in focus. So not much to talk about with the dollar index. We'll continue to watch the opening range for the week. I think it'll give us good guidance here. As far as event risk is concerned, moving forward, I mean, you do have durable goods orders, which will probably be the biggest mover ahead of Friday's GDP release. That's on the 26th. So on Thursday, we do get durable goods orders. And then obviously on Friday, the second read on first quarter GDP, we are expecting an upward revision. Here's what it looks like. I might as well show it to you. As far as that print is concerned. So we're expecting an upward tick from 0.5% to 0.9%. We'll also be looking closely at the core PCE, which is the Fed's preferred gauge of inflation. We are expecting that to hold steady at 2.1%. Remember, the target is 2%, and a lot of what you're seeing here can be attributed to some of the dynamics happening in the market. Energy prices, they'll talk about strength in the dollar, how that's still a hamper for inflation. Obviously, the stronger the dollar gets, the harder it is to stoke inflation. So it's going to be interesting to see what that number comes out with if we do get any revisions heading into Friday. All right, let's jump into the price action. Before we jump into the sterling crosses, just to highlight some of the comments that came out from the BOE last night. Lots and lots of Brexit talk, as we warned in the update, and kind of downplaying the possibility too. You know, lots of like dire forecasts. Brexit could raise CPI from 2.3 to 2.7. That's on account, obviously, of possible sterling weakness. Brexit could lower real wages by 2.8 from 2.8 by 4%. Brexit could raise jobless rate. Lots of other comments here. There's a couple of big ones. Brexit would put tens of thousands finance jobs at risk. Broadbent came in saying the Brexit may cause lower growth, weaker pound, would have a material consequence. You're getting the picture. I don't want to go through every comment, guys, but you're getting the picture, right? They paint a real dire picture for what would happen if we do get that vote, and obviously markets are interpreting that as sort of a warning that it's unlikely that we'll actually see that vote materialize. Either way, whatever way you want to materialize it, whatever way you want to see how participants are interpreting it, end of the day, price action's been pretty clear. Here's what it looks like. Start off with the British pound. And here's what the British pound looked like in last night's update. So we were talking about this near-term descending median line formation, and basically I was trying to say that we're at support right now. Now, the opening range, the only signal you had for the long side here. What software are you showing with the news, Rick? That's the Bloomberg terminal. Don't worry about so much about that. I'll keep you guys updated with anything important that comes across that throughout the day. Um, terminals typically go for like $3,000 a month, so not something that a retail trader will need on average for themselves. But anything you want me to look up, guys, if you have any correlation studies that you want to do, um, my tools are at your disposal. All right, Rick, you're more than welcome, man. But looking at the British pound, the only opportunity you had to get on the long side here was on a break of the Asia opening range. I was watching it, I missed it, and it kind of ticked me off that I did, but I wasn't about to start chasing because the move was pretty strong. So I don't even need to draw it for you, but here's sort of where the opening range was for not just Sydney, but also Tokyo. Okay. Again, this indicator right here is called trade sessions. You can find this at fxcodebase.com. It's called trade sessions, and all it does is highlights the high and low for each trading session around the globe. Okay. London, New York, Sydney, Tokyo. So the long and short of it is this was the only opportunity to get long. And it was a pretty decent stop, actually, even if you took the break against the lows here, looking for about, well, it's 124 on the daily. So what is that, 32 pips, 31 pips per scalp? So you want to keep that in mind. But long story short, that break ended up being the opening range break for Tokyo and Sydney. And that was the break that took us above that descending median line formation. So initial targets at 145.33 got taken out. Secondary targets at 145.80 got taken out. And we're sitting on that as support, form, or resistance. This is a pretty big level here, guys, at 45.88, 45.80 near term. So, excuse me. So as long as we continue to hold above that, pretty bullish signal here in momentum. Not immediately from here, but certainly that shift into overbought condition is something healthy that you want to see in uptrends. Keeps the focus above 45.88, 45.80. So if we go back, 45.80, the exact ends up being the monthly open. Okay, 45.88 ends up being the February high day close. Right here. So you have some pretty decent levels alongside that upper median line parallel in that daily chart. So you can see the 30-minute, that confluence there will act as near-term support. So not only do we have that upper median line parallel and the February high day close and the monthly open for this formation here that we've been following since last week, the median line also converges right on that region. So any way you look at it, you're looking at support near 45.80. Okay, if it breaks below 45.80, look to challenge the weekly opening range high. We're around 45.50, 45.46 here. Look for soft support, maybe near 45.30. But the bullish invalidation level gets raised from that 44 handle that we were talking about earlier in the week to this region right here. All right. So as long as we stay above 45.80. The lower median line parallel, continue favor alongside here. The big resistance coming up is going to be 46.64 into 46.80. It's a little bit bigger of a zone, but it's the next sort of major area of resistance. You're looking at 100% extension. This is off the lows for the year. And you're looking at the 2015 low day close, and that comes in right around 46.71. If you look at the 30-minute chart, you also have a 764 of the retracement, 46.64. So there's a lot up here stacked on the upside here for the pound. And of course, the yearly open comes in at 47.30. Any questions on the pound? Finally making a move, looks pretty decent, constructive above 44.87, major resistance near term heading into 46.64, 46.83. Okay, as far as event risk is concerned, you do get the release of the second read for first quarter GDP out of the UK as well. That comes on Friday ahead of the US GDP. So either way you look at it, heading into Friday should be a pretty volatile day for the sterling dollar specifically on account of the event risk alone that's scheduled. Where did you get that replacement for the sterling dollar in the 764 retracement? Let me show you. Just off the high that we made right here. That retracement. Oh, you got it. More than welcome. All right, so look for a pullback here to get back on the long side. Again, initially, if we do break below 45.80, I'd look for the weekly opening range where we maxed out here for initial support. Looking for that stretch just a bit higher. All right, so that is sterling dollar. Next up on tap was sterling CAD. A little disappointed with that. We highlighted this in yesterday's piece here as well. Was looking for a little bit more of a pullback to get an opportunity to get on the long side, but you just didn't get it. Here's what sterling CAD looks like first on the daily chart. The major key resistance that we rebounded off of last week was huge, and that's basically 192. 190, 198 is a 38.2 retracement. This is all the way back from last year's highs to the lows we made, last month. Nice clean median line formation. Catching that exactly. And even on the near term, the ascending formation, right? All I did, guys, was basically just take trendline resistance. Parallels have worked very well as pivots. And if you extend that off the low from the March 31st, support, pivot, resistance, caught the highs exactly, right? So the pullback here, I was looking for one last draw into 189.50, ideally 188.85 right here. Nice pivot in price to sort of look for exposure to the upside to try to get that next move up. Bottom line, you broke the weekly opening range to the upside here, so I still like the upside. I do think you get a nice snapback from this level, but you look to buy that inevitably. You look and see some divergence here into those highs. Again, broadly speaking, with our biases on dollar CAD and sterling dollar, another one that makes a lot of sense. We like dollar CAD higher, CAD weakness. We like sterling dollar higher, sterling strength. So we'll continue to watch this one. If this median line break does materialize and we close above that region, there's a lot of room to the upside. Your first level is going to be, I know it's outdated here, guys, but 2009 high goes whack a ways. And the February 2015 high day reversal close was a big day for the market, if you guys remember this. Huge reversal day early in the year. It turned out to be the exact 2009 low, if we scroll back far enough. Or 2009 high, excuse me. And again, the 2015 high day close, that comes in at 192.90. Subsequent targets beyond that, you really don't have much until 95.36, okay? Which lines up pretty darn well with that high that you made back here in February. And the 50 line for the current operative structure we're working with off the highs. So the levels are pretty clean. I can't, even from a scalping perspective, I can't really advocate, trying to chase this right up here. We've had a really strong rally off the low. And while this is typically a larger ATR trade with 152 pip daily ATR, I would need a better entry for even a scalping standpoint to try to take the long. So again, if you didn't get an opportunity to get on the long side here, I think you want to kind of sit tight on your hands. Look for the pullback to offer an opportunity to get back on the long side. As far as the scalping targets are concerned, you want to readjust that retracement at this point to adjust the new high. Now, obviously, we have no conviction that this is going to be a near-term high, but once we do get conviction, and once I get this at the high, oops. Once we do get some near-term conviction, more divergence, some momentum trigger to the downside, we'd look to work with these retracements on the downside targets. But as it stands now, you have to focus to see if we close above that 192 handle to close out the session today. Any questions on sterling CAD or sterling dollar? Thank you, BOE. Keep talking up that pound. Okay, I just want to touch on sterling Oz and sterling Key. Sterling Oz is obviously back above the yearly open. That's something that we were following over on the radar charts here last night. Here's what the sterling Oz trade looked like. And here's what sterling Oz looks like now. First on the daily, very similar setup in that you came off of huge resistance last week, 50% retracement of the entire decline off the August highs, very similar. Basic trendline resistance off the September highs. And here you have the 200-day moving average, which we're currently testing. That's interesting. I'm not sure why it's not going back. Oh, there it is. Okay. So 200-day moving average, which also coincides right on this region right now. Let's get the exact level. 203.93. Okay, we're testing that now. We're kind of trying to break through. Long and short of it, very similar scenario. Big market change in momentum profile. This is the first break into overbought territory you've seen since way back here, and certainly does shift the momentum profile to a constructive picture. Immediately from here, again, you look for a little bit of a pullback, but broader story, you stay constructive above the yearly open. That's 202.06. Here's what the near-term chart looks like now. And here's what it looked like last night. Okay, so if you remember, we highlighted this at the start of the month, at the start of the week rather, with that 199.95 level being a very key level of interest, specifically because it comes along the side of that parallel off the lows from last week. Well, that held, break above the yearly open keeps you constructive. Immediate target to the upside is 205.33. Okay, which is a long-dated 161.8 extension off the 2015 highs. And then obviously the median line for the formation that we're currently in. Remember, this is a multi-week formation which continues to hold with precision. Can you drill down for some possible entries to watch on sterling, any of them? So let's look at some of the sterling crosses right now as they stand. Okay, so 145.80 being the near-term support. Oops. $145.80. Low is 45.92. So there really wouldn't be something here I'd be interested in, Eileen, heading into the U.S. Open. For the long side, at least, I would need to see the opening range break to the downside, actually, to get some sort of conviction on a pullback before we start to jump on the longs here. Oops. So basic 38.2 takes you into like 45.50, which is actually the exact level that we talked about being the opening range high for the week. Here's your weekly open. That would be a level of interest I'd be looking for the long side. Okay, bear with me just a second. I just want to see what this looks like. Okay, that looks pretty good actually. So, excuse me, this is another one where near term, anytime you can fit structure to what price is doing, it's always going to work in your benefit. So again, I just kind of eyed this out, but a basic pitchfork off the low caught support, nice pivot in price, caught the highs. Look where the median line rests, right along that 38.2 at 45.50, which is also the weekly opening range. So ideal spot, Eileen, of where I would start to look for some long entries. If you want to tempt it with a little bit of a smaller position on a break of the London opening range high, your next topside target, like I said, you do have some room, but it wouldn't be a conviction trade for me. So it wouldn't be full of lottage. I'd be like half typical lottage on a piece like that. Does that help? If you're holding longs, I would just be bringing up my stop to just below 145.50, looking for that stretch into that 46.60 level. Now, if we take a look at British Pound CAD, I don't know if I have that in my symbol list, so just give me a moment. So on a move like this, you're already starting to get the pullback, materializing a little bit more. Not quite as clean. Yeah, I'd look for support around 191.27 on this one too. Both of these look poised. You just got to wait for the pullback to get a better risk to reward on this. I'm not going to start, buying at the weekly highs. But just keep in mind that the opening ranges have been breaking to the upside pretty much since the start of the week for each session. So we'll watch that as well. But broadly speaking, from where you are right now, some divergence into these highs, kind of on the stretch. Looked for a move back towards that 91.27. Look for possible entries on the long side there too. Helps, yes. I appreciate that. You're more than welcome. All right. Back to our setups. Sterling Oz covered. Did we go over Sterling Key, guys? Here's Sterling Key. Not yet? Okay. I just wanted to highlight a very simple thing. We broke above the yearly open. Obviously, I hope you guys are looking at that, 215.57. But there's a lot stacked up there that I wanted to highlight. You have a basic 236 of the entire decline off the August high. So all of these Sterling crosses sort of testing initial fibs from the August decline. Some of them are testing the 50%, some of them are testing the 38.2. This is only testing the 236, so it's sort of the laggard. And if Kiwi starts to accelerate even more so, obviously we're short on the swing side of things. That should help us here also on Sterling Key. So initial topside objectives, a basic 100 off the low takes you into 217.93. You have the 2016 high day close, which comes in at 220.31. It's the high that we made right here in January 15th. And then the major resistance is like 222.50, 222.40. You have a 38.2 off the high. You have the upper median line parallel for the current operative structure. And you have the 200-day moving average all stacked up right there. So it looks constructive. I'd like to stay constructive while above basically yesterday's low, which is that 100-day moving average, but we'll put the bullish invalidation level right along that median line on a closed basis, looking for that stretch higher here in sterling key. Here's what it looks like on the 30-minute. I don't have levels set up, but I just wanted to highlight. Whoops. We can get rid of this right now. On the near term, if you draw the pitchfork off the lows, you can see again a slope that might be in play with us struggling at the upper median line parallel as you mark some divergence. So the immediate upside bias is at risk. Longer story short, you stay constructive above that yearly open at 215.65. Both Sterling Oz and Sterling Key seem a bit spent already early in the week. Pullbacks better, both of them. Both of them. Now, again, let me take a step back. It depends what time frame you're looking at, okay? Like I said, if the opening range breaks to the upside, you might get another stretch higher before it return back. If you're trying to take this from a swing standpoint, yeah, you really, we're way off way off entry here. But certainly the near-term risk, I think, is for a pullback on both of these. You look to buy those pullbacks well above the early open. All right. Sterling Key, all the Sterling crosses are on the docket, and those are through and through so far. Euro dollar. Oh, the good old euro. Having rough days, but down, but not out. So near-term support now at confluence of the median line off the highs. Former upper median line parallel, resistance, resistance, breakthrough, support, 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 and 200-day and the 100-day, moving average, 111.58. Okay, momentum coming into 40 support, still have some room to the downside, but we'll want to see if that breaks that 40 level or gives us the rebound that we're looking for. Near term, otherwise, fulls my tendency for chase. Yes. Don't start chasing, Eileen. So that's euro dollar on the daily chart. Fuels, that's what you're trying to say. I got it. Here's what euro looks like on the 30. All right. And this is the chart that we put on yesterday's radar charts. Whoops. Okay, so the major support 111.87, 111.95, we broke below that, but we highlighted this key support target as well, that three-way confluence. So not only do you have the lower median line parallel here, the 100-day moving average here, but even on the near term of the descending formation, the median line comes right there. So we're at support right now. Okay, if we get this divergent signal holding into the U.S. Open, a pop back above this would be enough for me to start looking for long entries. Really, you need to clear the upper median line parallel to validate a breakout of this multi-week formation, in which case you'd be looking for 112.40, you'd be looking for 112.85, 112.80, still a big, big, big level. But the immediate threat is that 111.50 break. To the downside beyond that, in the case that we do look for a downside break, or if we do get the downside break, your next level is going to be the 111 handle. Okay, that's the 200-day moving average and the lower median line parallel for a little bit more of a near-term formation, just off the highs that we made last month and this month. Okay, you can see really nice pivot along the median line itself, support, support, break, resistance, resistance. That comes in just lower. Any questions on the euro? The levels are very clear. Again, we're looking for some possible exhaustion lows here near term. Next level down, if this doesn't hold, is going to be that 111 handle. And again, down here, I would start to look for some possible long entries again. or on a break above the upper median line parallel. If we finally get that, I'd be looking to buy pullbacks. In this zone right here, not really looking to do anything. And that is euro dollar. Any questions on the euro? Okay, Aussie Key with a little bit of a fake out last night, huh? Did any of you guys get involved with that trade? Looked to me like it was about to break out, and I wanted to highlight it on the radar charts. Here's what it looked like on the 30-minute last night. It looked to me like it had a really nice consolidation into the yearly open. It looked like a real strong rejection of that yearly open at 106.61. You also had a multi-month trendline support dating back to October, which was right there. Here's what it looks like on the daily chart. And while the momentum signature is pretty bearish, with what's going on in the Kiwi, it look like you could see some upside play back towards the median line where you could get better entry. So the rally fizzled out pretty quick, right? Here's what it looks like long and short of it on the 30-minute. You inevitably did get that topside break. It took out, or it came pretty darn close to our initial target at 107.35 before turning over, and here we are right back at that long-term multi-month trendline support. Not on the short side at all from this point. You're at support here. If we take a look at this from a broader perspective, the broader formation that we've been in off the highs, a sliding parallel of that same slope caught the lows exactly this week. Okay, so I'm going to be looking to see if this is viable for an actual reversal play to the upside. I still like it. I still like the upside play irrespective. I'd need to see a close below this region to sort of validate looking lower in Aussie Key. But this is pretty big. And guys, this is not just basic trendline support. This is the same slope we've been following since way back when. You guys remember all this? From the 2014 lows, pivot, 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 pivot. Same trend line. Same slope. Okay, so the yearly open is here, a 786 retracement of the advance is here. You have that trend line here. It's backed very closely, okay, by the lower median line parallel for the descending formation. Long story short, not looking for much short exposure from here. Still looking for this thing to level out. I would need to see, break above 107.86, like I said yesterday, to really validate a more substantiated turn in price here. But this is the initial topside target still. Okay. For Aussie Key. Any questions on this? I think we need some more patience. Bottoming processes are never things that happen overnight. It's typically a long and arduous process, but it does look like you're entering an area of which this thing is certainly vulnerable for a little bit more of an upside swing. Mark says, hey, Michael, can you take a look at Aussie dollar? Absolutely. Any questions on Aussie Key before we move off? Levels unchanged from yesterday, outlook unchanged from yesterday, sitting at support to open up the U.S. session. So we'll keep this one on the radar for now. Aussie dollar, Mark, looks like this. Okay. There's a reason I didn't highlight this yesterday. I know we've been talking about the Aussie a lot lately. I was telling you guys in the webinar yesterday. I did have a position on early in the week on the open on Sunday. I did get stopped at break even for the remainder of that trade as we dipped lower here. Look, you're testing the lower median line parallels. I don't really want to mess with it. Mark, if you put a gun to my head, I would still think this thing is viable for a near-term turn. But sorry about that. But here's what it looks like on the 30-minute. So first of all, right now you're getting divergence, and this is something actually I was looking at the 5-minute chart. Where is it? Do I have an Aussie open? There it is. So there's the break-even trade that I took on that move. But even on the near-term chart, I was looking at this right ahead of the webinar. You're seeing some divergence into the low, okay, which again suggests that downside momentum near-term is waning. There is a topside trigger on the 30-minute. Like so. And I'll be looking at this, heading into the US Open. I wish let me just snap these lines for you. There we go. So those are sort of the same still levels I'd be looking at. 72.81 is still going to be the yearly open. That's still going to be the break you need to validate sort of a reversal play per se. But watch that trigger and momentum on the daily chart. Today's close is going to be absolutely paramount, whether it's a rebound off that resistance trigger, whether it's a break to the upside. And as far as the Aussie is concerned, intraday, I really don't have a game plan here, Mark. If you, again, like I said, if you put a gun to my head, I would think, yeah, you're getting divergence. Maybe go up and check the weekly opening range low back into like 72. The bearish invalidation level, now that you've broken the opening range to the downside, needs to be here. That's going to be just below the weekly open, but it's also that longer dated 618 retracement and the upper median line parallel. This is sort of the breakout that you need with a move above the yearly open validating a turn. So I don't know. I'm not interested in being long dollar, not with the dollar index looking like this, right? Not looking to get long the dollar. So I can't really advocate a short Aussie dollar. I'd be looking to play the rebound in Aussie dollar, but we haven't seen the momentum turn. We haven't seen the behavioral change in price. So I'm a little bit cautious about Aussie dollar. But I still like the idea of finding some support here early in the week and looking for a topside turn. Mark, does that help? Now you're more than welcome, man. I appreciate that. Okay, some of the commodity trades that we've been following as well. I wanted to highlight the continued breakdown that we're seeing in gold. Looks pretty decent. First 50 break that we've seen pretty much, I want to say for the year. You got a slip here in January on that like 1 day correction that we saw on the 14th, but essentially we've held 50 so far since the start of the week. So if we do close below these levels, it's at risk for further losses. You're coming into some interesting support barriers right around 1232, which is the May 2015 high, if I show you right there, and also converges almost just below on that median line off the highs from early March. Here's what it looks like on the 30-minute, and here's the chart that we've been following for gold. Okay, so 1241, 1242 level is pretty big. Here's initial channel support. By the way, that chart was highlighted here on the 22nd. It's the same levels, guys, same levels. So we took out 1242, 1241, 1237, I think has been taken out. Pretty darn close, okay? And that's basic just channel support. So if you take these 2 points parallel to the low that we made last week or 2 weeks ago, comes in right along that level, sort of where we're holding right now. Okay? Still looking bearish below the weekly open, which would be right around this region here. Let me mark it for you. $12.51. All right, so if you need to take a snapshot for the updated chart, feel free. Again, there's a quick camera button there, guys, in the top right-hand corner of your screen if you need to click on it to save any of these charts for future reference. but still pretty clean on the gold trade. Oh, one other thing I just wanted to note on the gold trade was the bearish invalidation level that we started the week right up here at 1266. You want to lower that now because we have a new low in play. Again, I have no way of referencing whether this is a low or not, so I don't want to keep advocating doing this type of analysis where you just stretch it to the most recent low that you just made. But for argument's sake, as this low is made, once you get confirmation, you're going to use that 50% retracement convergence on the upper median line parallel as the broader bearish invalidation level. Okay, so just a quick note on that. Immediate bias is still lower sub 1251. And that is gold. A quick look at what crude is doing, also making headlines these days. Really nothing new to update here except the fact that that 618 retracement at 48.61, we highlighted this earlier in the month, continues to be the close high that this thing is pressing. You got as high as 49, but on a close basis, you've continued to hold below that 48.61 level. That's the level to beat. What I wanted to highlight on this chart was the support confluence that's been building up into last month's high day close at 45.98. So at this point, that's going to be our near-term bullish invalidation level and key support for crude. No divergence yet into those highs, but I'd be weary of it, especially if you get dollar weakness from here. It could further fuel the upside. Again, the targets haven't changed from last month. High day close for October comes in at 45.49. The high for October comes in at 50.90, backed closely by that 100% extension at 51. So the levels are pretty clean. It's just that this thing's looking at a little bit exhausted here below that 618. We'll look for dollar price action to give us a little bit more of a tell. Biggest mover is still going to be Friday's print. It's still going to be that PCE specifically and the revision to the GDP print for the first quarter, which was exceptionally weak. So if the first quarter ends up being revised upward, people start to feel a little bit better about themselves. Okay, maybe a Fed hike isn't so far off the papers. The biggest threat is still going to be the external factors, global factors for the Fed on whether they can choose to hike rates right ahead of the Brexit and some of the other concerns that we're seeing abroad. But that remains to be seen. The bar is set pretty high, I think, for them. Last but not least, I did want to just touch base, highlight once again, in case you're not sick of hearing me say it, 2039, 2044 continues to be the major key support here for the SPX on a closed basis. So, we made another attempt here today at a move sub 2044. The low of the session came in right around that mark. The low was 2044 exactly, actually, which was right at that 618 extension. Again, just a basic fib confluence, but on a closed basis, continue to call the lows all month long. I also wanted just to highlight that the price action here in the SPX, guys, has simply made a very objective monthly opening range, 2081 monthly highs, monthly opening range low at key support. Right, so we'll be looking for a break, whether it happens this month or even next month. When the range is held in such a fashion, the longer the range holds, the more violent, the more aggressive the move will be once we clear it. So just keep that in mind here. I think once we finally get out of this range, you're going to see this thing really start to pick up. Long story short, talking about this from yesterday, we were talking about the fact that the major focus right now to start the week is the yearly open into that key support. Just above the yearly open, you have that channel resistance. So we'll be looking to see today if this rally extends into that channel resistance, possible nice play to the downside. Momentum is at resistance as well. On a topside break, this would actually be a scalp trade I'd be interested in. On topside break above that objective trend line, which is a 3-point resistance, would look to play into the monthly opening range high. And that's it. Until we clear this range, you're only playing inside the range. That's it. I think you get a little bit more, again, just my humble opinion, but I do think you get a little bit of a move higher here into the U.S. session, and then you turn over. I really don't think they're going to see this thing. The broader risk is still for a downside break. Okay, and one thing that we've continued to look at as all this Fed commentary sort of comes into focus and everyone starts talking about, what the Fed may or may not do, one of the things that we've been talking about is the Fed funds futures and what those are pricing in. And if we get an update picture of that now, whoops, you can see that in fact, it's been mostly in line with around 30%. It's back up at 34%. I've seen it as low as 29%. Ever since the release of the Fed minutes last week, we saw a market increase. Remember, on Monday of last week, this thing was sitting at 4% probability of a hike next month. Okay, right after the minutes, it shot up to 30%. And since the minutes, we've been hovering around 28 to 34%, as you can see here. Irrespective, this is I think the one that we should be a little bit more, or this is the one I think I would bank on, and that's July. The biggest threat here is, will the Fed look to raise rates right ahead of the Brexit vote with such an event risk on tap that could really have larger implications for the European economy? It's a hard argument to make. So barring the June hike, which again is on the 15th, we'll see if that materializes. Market expectations are really starting to build for a possible hike in July. Now, the one caveat here, guys, is that July is not a quarterly meeting. So there have been questions raised, will the Fed look to raise rates on a cycle where there's not, a statement, where there's not the presser with Janet Yellen afterwards, where she can give a little bit more color and detail as to the pace and magnitude of normalization. So, a lot of people are questioning whether, in fact, July is going to be a live meeting and whether they would look to move on a meeting where they're not going to have that transparency with the market. That being said, I would still bank on July way more than June because of the looming event risk. So what this is telling us and why this is important, broadly speaking, is that those interest rate expectations haven't come off. Right? They haven't come off, which is why seeing the dollar strength right now isn't that surprising. It's not like outside the realm of possibility. It's sort of, it's just not surprising because we've seen those interest rate expectations really start to pick up. I still think that this thing's exhausted here, and the overnight swaps, the Fed fund futures have been showing above 30 or at 30 since last week. So I think the market has largely priced this in, my point. So if you see people, hounding this, drilling down or hammering down this point that, Fed futures are showing 30% and such, they've been. Nothing new here. So as far as a new release that'll actually shift market dynamics, I don't think this is one that we want to put too much emphasis on at this point. Again, I'll keep you guys updated on shifts in Fed fund futures. It's a great thing to kind of be able to gauge what really, realistically, what market participants are factoring in. I don't want to hear what the news headlines are saying. I want to see what realistically the markets are factoring in. I was having a problem with my internet. Please, can you summarize your dollar CAD analysis since you must have gone through it? Francis, I didn't go through it, and I'm glad you reminded me. I don't know how that's not on my list here. Dollar CAD, absolutely. Here's dollar CAD looks like. Wait for the pullback. I think you get it. Remember, last week we talked about this. This is a breakout trade anyway you look at it. You were marking divergence all the way into that low. This was a critical low. You made an outside day reversal off it. 2002 trend line, which has continued to offer a clear pivot in price. This is an objective break of the monthly opening range. I like it. If you're not already long, though, this is not the area where you'd start to look to do that. From a scalping perspective, this is sort of my near-term bullish invalidation level. If we get below the weekly open and this Fibonacci confluence at 31.13 into 31.17, I do think you risk a little bit more of a setback. But again, here we're going to have to adjust these to the new highs. Adjust some of these levels for you. Bear with me one moment. Let me just snap these lines for you. Okay, there it is. So this gray line here, parallel off the high for the year, which is just a parallel off of this slope. Okay, broke above it, checked it as support, moved off. The initial rally now testing these swing highs that you made in early April. Well, this is actually the April high here at 32.18. So, inevitably, I'm looking for targets into 33.25, 33.11. It's just where do you get on the long side? It's either look for long triggers here on a move lower, Francis, or look for a move into 130.15, a little bit closer to that lower median line parallel. What I don't like about this, oh, you're long already? Okay, cool. So look for support here. If this breaks, depending on where your entry is, if a pullback to the lower median line parallel is going to put you in the red, then this is maybe where you want to take a break-even stop or book your profits. If a move into that lower median line parallel will still keep you in the black, then I would be looking to hold. I think you got a lot of room to the upside here. But what I don't like, what I was saying earlier, what I don't like here is that, A, you've been getting some divergence, higher high, higher high, higher high, series of lower highs, albeit a much smaller magnitude, but lower highs nonetheless. And then the fact that we're turning ahead of the upper median line parallel. Okay, like I said, these are called raised ceilings. We talked about this yesterday. Typically talks to or hints of waning momentum. So we're seeing it in price, we're seeing it in momentum. Leaves it vulnerable in the immediate side, Francis, but like I said, 31.13, 31.16 near-term support. On a downside break, I'd be looking for 130.15. I'd be looking for that lower median line to offer some long entries for a swing higher. But the big level is still not until that 33.25, 33.11. Francis says, cool, all right. Can he drill down with his dollar CAD for possible entries later today? Sure. Remember the levels first, Eileen, before we even start to look for triggers in momentum. It's all about the levels. It's one thing I get concerned about, Eileen. I'm not going to lie to you. I feel like I don't want everyone stressing, the triggers all that much. It's a great tool to help us visualize the entry, visualize the shift in momentum. It certainly needs to something to tell me to pull the trigger, but it's not what's going to determine the trade. Where the levels are, where we are in price is what determines the trade. The trigger is just there to help us get the entry. So from my standpoint, I can't do anything here until we get down to 131.11, 131.16 anyway, right? So even if I find a long trigger right from here, what am I going to do? I'm put a 30 pip stop on a trade I'm only looking to take 26 pips on. But that being said, let's check it out. See, like you just got a trigger right now, actually. High in price. Looks like that trigger is going to try to push. But one thing you want to note is resistance at 60 on the last rally. Break sub 40. Looks like we could be seeing some waning momentum. In fact, if this is a break of the lower median line parallel here, you would expect this rally to fizzle out right back near that 31.66 target that we hit overnight. And one thing I want to check out, again, bear with me. Let's take a parallel off this line. Hey, look at that. So a parallel off that spike low that we made earlier last week comes in just above and highlights that key support. So a dip into this area would be the first place you'd start to look for possible long triggers, and at the same time would be the near term or immediate bullish invalidation level. Keep in mind the weekly open is right here as well. Francis, Eileen, does that help? Francis says, cool. Eileen says, glad for the reminder on the triggers. Yeah, just keep it in mind, Eileen. I see your questions all the time about let's drill down, and I'm always willing to do that. Don't get me wrong, 100%. But I don't want to stress like that's the only thing we're looking for, because if you start doing that, you'll start taking trades anytime you see triggers break, and you'll just be chasing levels, right? And that's the quickest way to find yourself in a chasing strategy as opposed to, a trading strategy. Um, so Eileen says, right. Rick says, is there a chance you could do a session defining triggers, how you set the pitchfork, etc.? Sometime, maybe just 30 minutes or so. Rick, 100%. If there's enough of you that really have a lot of questions on strategy, I know there is tons and tons of material online, both on SB and on Daily FX as far as webinars that we've done, but we haven't done like an official like training. This is a how-to webinar. The schedule is pretty thick for me right now, Rick, but it's definitely something I'll be more than happy to entertain if there's enough interest in it. We'll definitely go into a little bit more detail. But in the meantime, Rick, if there's something specifically that you have a question on, this is the place to be. Feel free at any time to throw it out. As far as pitchforks are concerned, it's more of an art form than necessarily a science. I would encourage you guys, all the tools that we use here, use them on your end. See how price action reacts around them. These kinds of tools and these kinds of strategies, the best thing to do is watch how the market reacts. I can tell you that most of my training, most of my experience has been coming or has come over the years, over my career, from literally just being in the markets and, doing my analysis, see how price reacts, see where I was wrong, kind of tweaking it along the way. That being said, you're in the right area. If you have any questions, always feel free. So guys, if there are no other questions from this point, we'll go ahead and wrap things up. Still looking for that possible exhaustion high in the dollar. Keep an eye on those dollar crosses. And overnight trade, there's really not much tonight. I wouldn't go crazy as far as the event risk is concerned. Heading into the U.S. session at 10 o'clock, you do get new home sales data from the United States. Later tonight, trade balance data from New Zealand. That's at 18:45 Eastern. Might be a decent mover for the Kiwi. We didn't cover that today, but I think Jamie's got a good handle on it. We're still short on the swing side. A quick look at this, guys, just to put things in perspective. Near-term key support I'm looking for is a break below this region right here, which is the 50% retracement of the advance. That's 67 essentially. It also falls dead on with the 50 line or the bisector for the current operative slope that we're working with off the highs. So a nice level, okay? And also, if you take just a basic trendline support off those lows, boom, okay? So that's sort of the level to beat here in the Kiwi, I think, to get this going. Initial targets would be the 200-day moving average, just lower at 66.46. But the levels have been exceptionally clean here. We'll continue to follow this one, favoring the downside on a break sub 67. All right. Way helpful. Many thanks. See you tomorrow. Cheers. Same to you. For everyone in the room, best of luck trading, and I will see you tomorrow morning. Keep in mind, tomorrow also we'll have Jamie's midweek strategy webinar at 1 p.m. Eastern. Till then, I'll see you guys tomorrow at 8:30. Cheers.